Bismillahirrahmanirrahim. Rabbi zidni ilma. Rabbi shrah li sadri wa yassir li amri wahlul uqdatan min lisani yafqahu qawli. Before we start the paper, we ask Allah subhanahu wa ta'ala to help us. We are doing May-June 2023, variant 22, question number 2. Before I continue with the second question, I wanted to tell you all that all revenue earned will go for the cause of Palestine, inshallah. So please do support me and please do support Palestine. Bismillah ar-Rahman ar-Rahim. So the second question that we have over here is that Ramla has calculated her draft profit figure for the year 28 February 2023. Adjustment in Ramla's ledger account have still to be made for the following items. So look, Ramla has calculated some things, but she needs to make some adjustments. All right. So for the first question that we have over here, it says that an amount of 99 owed to Ramla by May is to be written off as irrecoverable. So this is now basically a bad debt. All right. So the entry would be that since a bad debt or irrecoverable debt is an expense, we will debit it. All right. So we will write irrecoverable debt, irrecoverable debts. And look, guys, who is the person who has gone bad debt now? May or May. All right. So we will write May. Since it was an asset, but now this asset has decreased. Whenever asset decreases, it is credited. So we will write 99 here, 99 here. Question number 2. It says fixtures and fittings 875 were purchased on credit from Padma. I really do not like this name, but all right. Let's say Padma. Okay. So fixtures and fittings are assets. We will debit fixtures and fittings. Fixtures and fittings. And look, Padman has now become our liability. It makes me laugh, sorry. So Padma will become our liability. So whenever liability increases, it is credited. So we will credit it 875. 875. Then we have a loan repayment had been incorrectly recorded as loan interest. So guys, we had done what? A loan repayment had been incorrectly recorded as loan interest. So now what will we do? First and foremost, loan interest we will credit it. Why? Because we had recorded an expense which is not an expense. So in order to decrease that expense, we will do what? We will credit it. And since loan we are repaying it, we are repaying an expense, we will debit loan. All right, by 500. Since our liability, loan is our liability is decreasing. Whenever liability decreases, what happens? It is debited. That's why we debited it. Question 4. Rent paid 350 had been recorded as 530. Now guys, tell me one thing. Did you record the rent as high or low? We recorded the rent a bit higher. So we would credit our expense because we paid extra money. So we would credit it. So we will actually do 530 minus 350, which is 180. And the remaining money, this 180, would be returned back to our bank or cash. Next question. We have drawings 120 had been debited to wages account. So you would debit your drawings because drawings had to be rightfully debited, and you would credit your wages. So 120, 120. All right, so far so good. Alhamdulillah. Moving on to the next question, it says complete the following table by entering amount of each adjustment required to calculate Ramla's adjusted profit. If an item has no effect on profit, enter 0 in the no effect on the profit box. Okay. So first of all, the first entry is that irrecoverable debts. Look, this is a bad debt. Bad debt is an expense. So because it is expense, it will decrease our profit by 99. Okay. Second, fixtures and fittings. Look, we purchased an asset for the business. It has no effect on our income or our expense. So we will write 0. third entry, basically, we had calculated loan, we have repaid our loan, but we debited loan interest. By mistake, we had recorded an expense which was not even an expense because we had no loan interest to pay. So we recorded an expense which did not even exist. So now, for example, I had given someone money by mistake. Now I am taking that money back. So my profit would actually increase. Then we have bank and rent. Look, by mistake I had recorded additional rent. All right. So now I am bringing that money back into the business. So my profit would increase. And lastly, again, by mistake, we had recorded what? We had recorded expense, wages, which does not even exist. There were no wages to be paid. We just took drawings. So now we will add this back into our business. So increase in profit is 800. I added all of these three. And decrease in profit is 99. No effect is 0. So I will add 800. Okay. And I will subtract, like, I subtract 99, I add 500, I add 180, I add 120. So my profit now is 12,351. Okay. Next question. It says how the journal for item 1 complies with prudence principle. Look, prudence principle is irrecoverable debt. All right. Sorry, the journal entry is irrecoverable debt. So according to prudence principle, profit and assets should not be overstated. So item 1 complies with prudence principle because according to this principle, I'm very sorry for my bad handwriting, guys. Profit and assets should not be overstated. Okay, guys. Profit and assets and losses and liabilities should not be understated. Okay. Good job so far. Next question. How the journal for item 5 complies with business entity principle. Let's look at item 5. So in item 5 we credited wages and we debited drawings. So according to business entity principle, the business is regarded as a separate legal identity. All right. Journal 5 item complies with the business entity concept because according to this concept the business is regarded as being completely separate from the owner of the business. That's why whenever you take drawings, it's not an expense, you have to return it back to the business. So guys, we are done for the second question. I hope you were able to understand each and everything. Please do like, subscribe and share my channel. Your support would actually mean a lot, just not for me but for the cause of Palestine as well. Assalamu alaikum, take care.